Welcome to your next edition of Highlights, our ongoing trading and active investing strategies anyone in any market can use. Remember, as part of our CandleCharts.com family, you get these on an ongoing basis. So let me show you something interesting. So here, show you some magic. Okay, here we have a group of 6 cards. Now I want you to think of one of these cards. All right. Now, I'm magically going to show you something interesting as we go to the next slide. Wow, your card is missing. But how did I know that? Well, this brings us to the core of this highlights because we normally just focus on one aspect. Is it a good trade or a good investment? Looking at sometimes an individual aspect. Is the market testing support or is it testing resistance and so forth? And so let me go back to the next slide. The reason I was able to do this magic trick, and it fooled me the first time I saw it, so let me go back to the next one, is because every card here is different than every card here. So no matter what you picked here, of course, it's not going to show up over here. And the reason this worked is because, once again, we didn't look at all the cards. We just focused on one. So with that in mind, one of the key things we have to look at no matter what aspects we use for a trade or an investment, like I said, is it confirming support or resistance? Is it in the direction of the long-term trend? One aspect that we always have to look at that many of us ignore is risk reward. Okay, this is one of my most important trading and investing rules. And for those of you who don't remember what risk reward is, it's essentially whenever you put a trade or investment on, what your risk is, that is your stop out level, and one should always have a price that says he or she is wrong, and reward is the profit potential. So normally we suggest a risk reward of 1 to 3, but there are some nuances to that, beyond the scope of this brief highlights video. So let's look at this concept of risk reward. And to that, we're going to look at a chart challenge. The Japanese say, there's a Japanese proverb, knowledge without practice makes but half an artist. So we're going to do a little practice here to make you a better artist. We're going to give you a chart challenge. And we have these from time to time, as you know, for those of you who look at watch our highlights or take advantage of our education. So let's look at one here. So first of all, what patterns are at 1 or 2? Now this happens to be a Forex market. Maybe hard to see, it doesn't matter. Whatever we go through here is applicable in all markets in all time frames. So what patterns are at 1 or 2? So we have a green candle, market's in an uptrend. Green candle, the market's in an uptrend. And then we have a red real body, which obviously means the close is lower than the open. So this red real body gets more than halfway into the green real body, as it does here. So what patterns are at 1 or 2? You could put the player on pause as you think about it. Okay, they're both dark cloud covers. Okay, now, which is the better short? Now, once again, because this is Forex, it's just as easy to sell short as it is to go long. But whatever, as I mentioned before, whatever we're going to go through here, we could use in all markets. And I'll get to that point in a second. So which is the better short trade? One. Now remember, we don't know it's a dark cloud cover until the end of the session. So is it a better short sale here or here? So what we need to do is determine what our risk is and what our potential reward is. We're looking at the risk reward. So once again, put the player on pause and think about it. And the answer to this is 2. And let me show you why. Okay. So with this dark cloud cover, my target would be the recent lows. It was tested 3 times, right? So in this case, this is your risk, a close above the high of the dark cloud cover, and this is your profit potential. So it's almost a one-to-one risk reward, which is really not that good. Now let's look at the same pattern, but they're both dark cloud covers. But let's look at the difference. So here's your risk, a little above, the high of the dark cloud cover, and once again the target would be down here, okay, which was obviously met. So this brings out an important point. You could have exactly, and this is something we refer to time and time again with our education, why it's so important that you get your education from us, because we go beyond just the basics of helping you to know which is a candlestick signal. These are both dark cloud covers, but we go that extra step by telling you when and when isn't a good time to do the trade, because although these are exactly the same pattern, we would step away from the potential trade at 1 and we would be entering the trade at 2. Now it doesn't mean you don't go short here. It's not a great risk reward, but I would not be as aggressive as having many positions on here as I would here. Now, as I mentioned, this is on Forex, so it's just as easy to go short. But on the flip side, let's imagine it's an equity, because not many of us short equities, unless you're trading options. So this would be true also. Let's say you have piercing patterns. Again, just use your imagination. Say you have a piercing pattern here and a piercing pattern here, and one of them has a better risk-reward ratio than the other. Okay, so if it doesn't have a good risk-reward ratio, I would step away from going long on the piercing pattern as opposed to one that does have a good risk-reward. So one of the core concepts, there are 3 major aspects we look at when we trade, and one of them is risk-reward. Now, for those who want to continue your education and find out what are other 2 aspects that we look at when we recommend a trade or an investment, what you could do is go to our candlechartsacademy.com. If you don't have an account with us, click on here, or actually, type this into your browser, and you'll come to here. And if you do have an account, you will automatically get a login. And here's where you have access to our education. And if you don't, you can get all these items, including the 4 common and costly mistakes almost every trader makes. And in that, we go over the key rules you need before, the key things you need to look at before you do any trade and investments. This part, actually, my most important trading rule, we touched on in this highlights video. I go into much more detail about the risk reward because this is my most important trading rule. Plus, you get all this. So be sure to go to this link at www.candlechartsacademy.com to start your ongoing education. Thank you for joining me.